All right, now let us continue with our current issues for SBR. And in this video, in this session, we will look at the bin the clutter. Firstly, we need to know what is mean by clutter. Okay, so clutter is something which invades your space. Clutter makes you disorganized. Or you can say stress out of control. Clutter distracts you from your priorities. All right, clutter can stop you from achieving your goals. Right. So this definition of clutter may not be completely applicable to annual reports, but it is possible to see certain aspects which are applicable. And as per the UK Financial Reporting Council (FRC) and as per the ICAS Institute of Chartered Accountant in Scotland and the New Zealand Institute of Chartered Accountants and as well as IFRS uh, produce a report on clutter, right? So clutter is actually a problem in financial reporting, right? It's one of the problem in financial reporting, which obscuring relevant information and making it more difficult for users to find the key points about the performance of the business and its prospects for the long-term success. So the main problems, or you can say the observations published by IFRS and FRC are: number one, it is substantial scope for segregating standing data, for segregating standing data either to a separate section of annual report or to the company's website. Immaterial disclosures are unhelpful, and they should not be provided. Three, there should be continued debate about what material means from the disclosure perspective. What materiality means from disclosure perspective. So it is important for the efficient operation of the capital markets that need annual reports do not contain unnecessary information, and it is equally important that useful information is presented in coherent way. Right. And the causes of clutter in annual report is, the vast era of requirements imposed by laws, regulations, and IFRSs, that means financial reporting standards. Financial reporting standard setters have a key role to play in cutting clutter, but both by cutting the requirements they themselves impose and by guarding against the imposition of unnecessary new disclosure. Right? Listing companies listing companies may have to comply with listing rules. Company law and IFRSs. The corporate governance codes if has an overseas listing and local requirements such as those securities and exchange. In the US, major source of clutter is the fact that different parties require different disclosures for the same matter, right? So major reason is different party require different disclosures on same matter. So, right. So now the solution is, what's the solution to cut the clutter, right? Materiality should be a driving source or a driving force for disclosures. The how much the information is material, that should be the driving force to decide how much disclosure should be provided. But here is another problem. Materiality is highly subjective. Something which is uh, material for you may not be material for me. It's depend to the organization to organization, person to person. So one of the important challenges in the changing audiences from its origins to reporting to shareholders, preparers now have to consider many other stakeholders, including employees, unions, environmental, suppliers, customers, etc. So these are the issues regarding the bin clutter, and I hope you get it. See you in the next session.